Good day, guys. It's your guy here, the unknown, and today I want us to look at something very important. I want us to actually reflect back to Friday and how Friday traded. And I'm specifically choosing Friday because Friday was the most easiest day, okay? And I believe it's going to remind you some important things that we once spoke about. Actually, we spoke about these things countless times, okay? And if you remember, please comment below and tell me that you remember. If you are new, kindly hit the subscription button so that you don't miss more content, because the objective of this channel is to help you become a better trader. Okay, so guys, look at this. Friday was the most easiest day, and what made it easy is the correlations. Remember, I once told you that correlations are important. Some of the days correlations will be weak, but there's a time when the correlations will be so strong, and when they are strong, they're going to give you free easy cash. And when I say free and easy, I seriously mean this. Look at this, guys. Look at this. I told you that when the correlations are high, mostly one is going to lead and the others are going to follow, right? If you still remember this, comment below, because I've said this in many of my videos. And yes, of course, since February, the correlations has been roughly a little bit weak. But we spoke about correlations and what happens when they are strong. And you don't have to forget that, okay? That's the most interesting part of being a trader. There's a lot of information you need to know. And again, when you are trading, there's a lot of things you have to be thinking about. So let's look at Friday. Don't mind about Bitcoin here. I just put it here so that this screen can actually have four parts, okay? Because this is how I trade on a daily basis. And I told you that one thing I look for is I will divide my screens like this so that I see how these things are trading all together, so that I can see the easiest trade and actually execute on the easiest trade. So this is how I do this on a daily basis, okay? Or when I'm trading live, okay? So look at this, guys. Look at this. I want you to pay close attention to what happened here, okay? This video is going to be so short, okay? Look at this. You see this? You see this? You see this? You see this? Okay, let me use red, okay? Let me use red because this is important. Look at how they've been trading throughout the day. I told you, you come to your screen 5 to 10 minutes before the session begins, and you start by identifying what kind of pattern are you, what kind of trend do you see, who is trapped. Those are the most important things that most of you tend to forget, right? Most of you tend to forget this, and I'm going to show you the importance of these things. Look here. You see, this is how they've been trading throughout the day. If most of you don't ignore what I share with you and actually prefer starting during the session and looking for the pattern, you'll actually see these things. These things are important. Come 10 to 5 minutes before the session begins and go through your charts. See what kind of trend do you have. See who is trapped, okay? If you were looking for that, you would have seen all these things. Look at this. This is Nasdaq, this is the Dow, this is S&P, okay? They went down. Oh, that's great. And then they went up, okay? They are all at the closing price of yesterday. You see the blue dotted lines. What did they all do? They went up. Oh, fascinating. This is now fascinating. They all went up and started playing. They all went up and started playing. They all went up and started playing. Look at how they were playing. Everything was similar. Everything was the same. Everything was similar. You see, just before the news, these are the news over here. Look at this kind of a move. They go down, come up, come, and then they play, news up and down. Okay, look at how the Nasdaq did. Same thing, playing, news up and down. Oh, let's look at the Dow. What did the Dow do? Oh, same play, news up and down. And after the news, what did they do? They went down. Okay. After the news, what did they do on S&P? They went down. After the news, what did they do on US30? They went down. Okay. Who is trapped? Who is trapped? Who is trapped? Let's look at trap volume. Obviously, these people below here were trapped before the session. Okay, when we were analyzing. Okay. However, when the session actually opened, we were now here, down here. Okay. Oh, they were almost released. Okay, they were almost released. Okay, so look at this. I want you to pay close attention to the correlations now. Pay close attention to the correlations. The correlations are very high at this moment. Why? Because they are giving you the same kind of moves throughout the day, right? Now let's go to the session. I'm gonna zoom out to the session, right? I want to show you something that happened because on Friday, wow, Friday was just free easy trades. Okay, pay close attention now to what I will be showing you. Okay, pay close attention to what I'll be showing you. Pay close attention. The Dow, I told you, when they are correlated, one is going to lead, the others are going to follow. Most of the time the Dow is actually the one following, and mostly the Dow will be the one which is less volatile. But look at what happened on Friday. Immediately when they opened, I told you, do not trade the first candle. Why? Because the first candle is mostly going to be a stop hunt, or it's going to be the biggest candle, but mostly it's gonna be a stop hunt. Okay, mostly it's gonna be a stop hunt. That's what I've been saying over and over and over again, and you can tell me in the comments if what I'm saying is true. Have I said this over and over again? Have you heard me saying this over and over again? Just tell me in the comments. Okay, you see, the first candle is mostly gonna be what? A stop hunt. Today they're highly correlated, so correlation is part of the equation today. Okay, look at this, guys. We have spoke about this. Okay, we've spoken about this. The second candle on the Dow shoots up 200 and 200, roughly 270 pips, close to 280 pips in 3 minutes. In 3 minutes, okay, 3 minutes. Yes, of course, nobody expects you to get this. Okay, and it's starting from the closing price. Oh wow. Wow, 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 wow. This is amazing. Okay. The Dow is also at the close. I mean, the S&P is also at the closing price. The first candle goes down. Look at this. That's why I'm choosing Friday. We'll talk about what happened through the entire week in another video, because the setups were there. Okay, but this day was special because the correlations were so high, and we've spoken countless times about the correlations. Look here, 1 2 1 2 3. This is where the third candle is on what? On S&P. This is where the third candle is on the Dow. On Dow already, the third candle was way too high, 270 pips. But the third candle on what? On S&P was still here, but already it has left already. It was moving up, okay? It was going up. The correlations are very high through the entire day. Okay, fine. Let's go to the Nasdaq. When we look at Nasdaq, we will realize that, okay, fine. What did we have? Okay, we have already spoken about the first candle, so it's safe to remove this, right? 1 2 3. The third candle on Nasdaq was still what? Was still a bearish candle. The correlations are high. What does that mean? It means they are moving in this, they are moving in the same way. Okay, what one is gonna do, the other is most likely gonna do, because these correlations are so high throughout the day. They've been giving the same kind of moves. We have spoken about this. So look at what happened. S&P followed slowly. Okay, followed slowly. Let's look at this. Okay, the Dow is still 1 2 3 4 5 6. You see? Okay, let's look at 1 2 3 4 5. The fifth candle. Let's look at the fifth candle. With the Dow already, it was already high. Okay, most of the move was already gone. So with let me remove this. This is actually distracting me, but it's okay. Let me remove it for you to see, because I want you to pay close attention to the correlations. Let's go now to the fourth candle. 1 2. Okay, let's go to 1 2 3 4 5. The fifth candle, right? We are going now to the fifth candle. Okay, to the fifth candle. I want to show you this easy things, because they are gonna keep happening, guys. You see now, okay, this color is a little bit invisible. The power of correlations. Okay, 1 2 3 4 5. This is the fifth candle, and fortunately enough for me, on Friday I didn't wait for the pattern. I executed my trades before this candle closes here. Why? Because we've spoken about the correlations already. And yes, on this day they were highly correlated. Oh, I just removed the session. I just removed the session. Okay, it's fine, it's fine, it's fine. Okay, let me just do this. Okay, let me just bring it back and do this. Okay, now you see the fifth candle is here, but let's look at the fifth candle on S&P. 1 2 3 4 5. The fifth candle is already gone. The fifth candle is already gone on the Dow. Okay, the fifth candle on S&P was way gone already. So we are anticipating that most likely these are gonna move in the same way as the Dow. This means the Dow led the move for the day. Why? Because the correlations were so high. Okay, and this is nothing new. We spoke about correlations before. It's just that they haven't been giving this kind of strong correlation for a couple for some time now, and that's where I believe most of you tend to forget. Okay, but this is information you have, this is information you know, this is information you should capitalize on. So for me, I executed here. Why? Because already at this time, this one was already gone. Okay, this one was already gone. I executed on 1 2 3 4 5 6 on the seventh candle. 1 2 3 4 5 6 7. You see, by the time I executed on S&P, there was already a sign that S&P is already gone. Okay, S&P is already gone. Okay, by the time I executed on Nasdaq. So for me, I took this one without the pattern. Why? Because of the correlations. Okay, and yes, they did pull back and give another opportunity for an entry. This is an engulfing candle that engulfed these two candles. Okay, so this shows you now that the move is actually going strong. Okay, so this was the easiest trade. Because of what? Because of correlations. How many pips did I target? I targeted 200 pips here. Why did I target 200 pips? Because already they are highly correlated, most likely gonna do the same thing, and the Dow has already gone in its first push. It has already gone roughly 270. So I anticipated that, okay, it's fine. Since they are correlated and they are mostly going to do the same thing, it means they are going to go up to 200 pips, because that's where the Dow actually went before they started now playing. Okay, it went 200 pips. So yes, of course, I targeted 200 pips, and let's see what happened. Oh God, this is amazing. Okay, this is amazing. From my entry, they went straight 200 pips and hit 200 pips, and they went to 04, if I'm not mistaken. So they went 4 pips above my target. Okay, so my 200 was hit. I entered without a pattern. Why? Because of the correlations. Are you always gonna get this kind of opportunity? No. Okay, it's gonna take some time for them to give something like this, but when they're highly correlated, guys, the move they're gonna give is gonna be a very big move. Okay, that's why this kind of things don't usually happen most of the time. So I tell you things that are important. We speak about different trends. Sometimes you are in an explosive trend, and when you get that explosive trend, you're gonna get more. Let me give you an example of what I mean. Okay, let me give you an example of what I mean. Let's say for instance, okay, okay, I just want to use this indicator here. Okay, let me put it as 5 is okay. I just want to show you, demonstrate something for you quite quick. Okay, and let me use this chart over here. We spoke about this kind of a trend. It's a creeping trend where maybe they break down very quick, right? And then all of a sudden they start creeping. Guys, I told you that there's a reason they actually you fall quickly, and then they use their time to actually do what? To actually creep back up. What does this mean? For those who know, this simply means that most likely this is going to give you free cash. Why? How am I saying that? I'm saying this in terms of this. I'm saying this in terms of this. Okay, this is a creeping trend, and the reason that they broke down very quick and they took more time than they fell to actually creep. This is just trapping. Okay, this move is most likely gonna do what? Gonna continue down. So look at this. Tell me, what if the distance from here? What if the distance from here? Say maybe they're giving you the opportunity here. Maybe they give you a pattern here. Okay, say maybe they give you a pattern here. Let's say maybe now the distance between here and here, it's 400 pips. Okay, it's 400 pips, or it's 200 pips, or it's 250 pips. What does this mean? This means this opportunity is gonna give you free 250 pips. Why? Because most likely this is where this move is gonna reach. There's a reason they fail quickly and now take time to actually trap and fall quickly. Remember, when the markets are gonna go, they're gonna go very quick. Okay, they're gonna go very quick. So this is just where they are using this creeping trend to actually get those who are counter trending. So your job is to wait until you have an opportunity. Your job is to wait until you have a pattern. Your job is to wait until you have a simple opportunity, of which on Friday was presented by what? Was presented by correlations. We spoke about all these things, but I know most of you tend to forget because they don't give this much often. Guys, when they do, it's going to give you the best opportunity, an opportunity which is going to be maybe 8 to 10 times bigger than than the 50 pips are we usually target. Okay, because I'm telling you, if this distance here is 250 pips, you can target 250 pips. Hence on this move I targeted how much? 200. Why? Because of the correlations. Okay, the correlations were too strong throughout the entire day. They were giving the same kind of moves, and of course they were still gonna continue giving the same kind of moves, but they just changed the momentum. Okay, they changed. Why? Because all of a sudden throughout they've been giving the same thing, but during the session, what did they start doing? One just actually shot up immediately, so the other ones started to follow. But that was not all. That was not all. Okay, that was not all. Let's look at what happened. You see, in this case, Nasdaq is the last one to follow. Easy trade. Easy. Free, easy. This was the last one to follow. But look at what happens later. Guys, when I tell you that Friday was wow, I'm not joking. Okay, look at what Nasdaq did. Okay, this one came, started playing. But let's look at Nasdaq. Nasdaq followed straight. Okay, and then all of a sudden, what did Nasdaq do? Now, okay, it's creeping down. Okay, it's creeping down. But let's see here. Nasdaq gave you something like a double top. I don't like double tops unless they do what? Unless they retrace. Okay, so this is something like a double top, or if you didn't see a double top, this is half Batman. I spoke about half Batman countless times, and I actually told you to go to Google and search half Batman. Okay, and I actually searched it for you in my last videos. I think it was my last two videos. Okay, and most importantly, the thing that I enjoy is that we speak about something and it keeps happening. We speak about it and it keeps happening. Okay, we don't just speak about things after they've happened. We speak about them, they happen. Why? Because this is what they always do. This is how they always behave. This is their normal behavior. Okay, this is what they do always, but most of you tend to forget because what you care about is, oh, the session has started, I'm gonna look for a pattern, evidence candle, and then I'm in. But you tend to forget the most important things, because other opportunities are gonna give you an opportunity to actually double your account very quick. Why? Because obviously I targeted 200 pips, and this 200 pips was hit very quick, very quick. Okay, 200 pips was hit very quick. Imagine in 30 minutes they managed to hit 200 pips, and this was anticipated. Why? Because these things were highly correlated throughout the entire day. And then what happened later? This one just shot up more than 200 pips. So of course 200 pips was anticipated. Okay, even this one went beyond 200 pips very quick. And yes, it was anticipated because this one just shot up immediately at the open. Okay, and I'll show you something again. Oh, guys, let me just show you this. Okay, if okay, let's go to a 5 minutes before I show you this. Okay, let's go to a 5 minute time frame, because guys, you just tend to forget things when after we've spoken about them. Did I anticipate a move up? Remember, I told you it's not about what you think, but you have to be aware. Okay, look at this, just before the session began. What did you have when I was analyzing? We had an explosive trend just before the session began. Okay, when I was analyzing, we had an explosive trend on the Dow, and I was expecting this to actually be something like explosive, but you have to be careful. Okay, because yes, they did come and break here, but this doesn't change. They already gave a setup of an explosive trend. What is an explosive trend? It's where you have two trend lines at different levels. And of course, I know that yes, here they actually violated it. That's why I started observing these things very carefully. Okay, and that's why when this one shot up, I didn't even do anything. I just waited and sat patiently because I knew the correlations were too high. Okay, so you see, the Dow gave something like an explosive trend. Oh, I told you, We speak about things and most of you tend to forget because you only care about what happens during the session. And guys, you're gonna miss a lot of opportunities if you do that, okay? There's a reason we actually spoke about these things, okay? So look at this. This one actually gave a half Batman. Now, here's the most important thing. What time? Look, okay, you see, they gave something like a half Batman. They broke down and they came, and now they're breaking down. You see, as they are now breaking down, this is an engulfing candle because they gave something like an evidence candle, okay? They gave an evidence candle, but they retraced back, okay? They retraced back. Let's look, okay? They retraced back, and this was already too big, okay? But look, as they are coming down again, it's up to you which one you can take, okay? You can take this one or you can take this one. But still, again, I know that this wasn't the best pattern, okay? It wasn't the best pattern. So it's okay even if you didn't take this pattern. Why? Because it wasn't the best pattern, and we always focus on the cleanest pattern. Hence, I always tell you that I look at this things like this because I can see which one is giving me an opportunity and how they are actually trading throughout the day, okay? Those are things I can see. Those are things I can see, okay? Those are things I can see. So that's the most important thing. These are things I can see, okay? So look at this, guys. Look at this, guys. This one wasn't the best of patterns. Oh, maybe you missed it. But let's look at the time. Let's look at the time. What time was this breakout? Oh, guys, it was 14:36 on this. The broker is behind in 2 hours, okay, which means it was roughly 16:36 for me. But let me put the time of the broker, okay, because there's a reason I'm putting the time of the broker, okay. I'm putting the time of the broker here, okay. Let me put the time of the broker, okay. Let me look at it again together with you so that we put it was roughly 14:36, right? 14:36, okay. Yes, it was 14:36. So I'm just gonna put 14:36 somewhere here because I want you to pay close attention to this, okay. 14:36, okay. 14:36, okay. Guys, I know you want 15 minutes video, but if you really want to be a good trader, you have to invest thousands of hours into learning. Thousands of hours, and I'm not lying, okay? This thing of people wanting to learn through a 15-minute video, you are part of the 95% that are giving all their money to the 5%, okay? There's a reason 5% of people are profitable, and that's because most people just want 15 minutes. Oh, most people just want simple things, support and resistance, that's it. Guys, you have to put in time to learning. You have to invest thousands of hours into backtesting. I'm not gonna lie to you. I've shared all the backtesting tools you'll ever need, okay, on this channel with you. I've actually shared the most important things with you, okay. You need thousands of hours of backtesting. If you can, download data from Duca's copy bank and then install it on your, I showed you the steps anyway. I just know that only few of you are willing to put in the work, but you all want to become profitable. So guys, I don't know about that, okay, but the reality I can tell you is that 95% of the people are losing and only 5% of people are actually profitable, and that's the stats, and stats never lie. And part of the 5% who are profitable, we have people from stock exchanges, we have hedge fund managers. So guys, that's up to you to decide if you really want to learn or if you just want 15 minutes videos and you call that learning. But anyway, anyhow, guys, this is what happened. This one broke down at 14:36, okay. Now let's look at this one gave a this one gave a the Dow on its way down, it gave a beautiful opportunity. It was the first one to shoot up. It was the leading one going up, okay. But look at this. Most of you got this one, okay, and guys, congratulations. Look at this one. This pattern was so clean. It's a right angled triangle, okay. And I told you, when they're building a pattern, people are always thinking it's gonna break up. No, guys, just sit down and relax, okay. Wait for the pattern and the evidence candle, okay. But here I didn't wait for that because of the correlations, okay. Look at this. This one broke down at what time? This one broke down at 14:56. This now is 14:56. Remember, this was the one which went up very quick, okay. It's 14 what, 56 or 46? It's 56 if I'm not mistaken, okay. It's 14:56, okay. And this one broke down, I mean the breakdown, this one broke down at roughly 14:36 because it's this candle over here. It's this candle over here. So guys, you can see this one didn't present a good pattern, but the correlations, The correlations were too strong. I'm not saying every day look at this in terms of correlations. No. Why? Because there are days when the correlations are not strong. But the reason I started by zooming in to show you what happened from the beginning of the day, how they've been trading, how they traded throughout the news, how they traded into the beginning of the session, is because the correlations were high on this day, which was Friday. This is going to repeat itself, but it might not repeat itself this week. But there's a day it's going to repeat itself, and it's going to give you the most easiest opportunity. Okay, so now let's look at this one here. Let's look at S&P, because the correlations are so strong, and yes, they are going to give the same move. This one obviously it's going to give something similar to the Nasdaq, because that's how they actually trade on a daily basis. Okay, this one gave a half Batman, a half Batman. Okay, a half Batman. Yes, it gave a half Batman. Look at this. This was roughly a half Batman. We spoke about half Batman's countless times. Let's see now, what time does this one break out? Okay, which one are we going to use as a breakout? Okay, because okay, they broke out. Okay, this was the first evidence candle. Okay, this was the first, but let's talk about where they actually went down. So you see, I'm taking where they actually went down. Look at the time here. The time here is roughly 14:53. This is 14:53. So this one happened 14:53. Okay, this was 14:53, or not 56, 14:53. Okay, now let's look at the times and what this actually told us, knowing very well that there was a very strong correlations, right? Look at this, 14:36. This happened very early. Okay, so if you missed this one, it wasn't the best of pattern, of course I know, and even this one wasn't the best of pattern, yes I know. Okay, but look at this. This happened early, this followed. Okay, so if you doubted this pattern, by the time it was 14:53, let's look at 14:53. Where are we gonna find 14:53 on the NAS? 14:53. Okay, now 14:53, this was already a clue. This was already a clue. You see, they've already gone down away from the pattern. Okay, 14:53, that's when this one actually broke down. So you see, you could have taken this one based on the correlations, because this correlation proved to you already that this move is very strong. Okay, this move was roughly already 50 pips down. Okay, by the time this one presented the opportunity. Correlations. You're not always gonna get them, just as you're not always gonna get the trends. But the day you do, believe me, the day you do, it's gonna be an easy walk on the park. Just as you saw on the Dow, it was a creeping trend. It was like an explosive trend. But I know most of you didn't pay close attention to that. But it's okay, guys. I'm not judging anyone. Okay, I know most of you are still learning. But these are things you should bear in mind, because they are not always gonna show up. But when they do, guys, you can actually go in heavily. Okay, look at this now. Okay, by this time 14:56, let's look at 14:56. This is 53, 54, 55, 56. By 56 already, we were where this is the candle of 1546, it's 14:56. 14:56, let me make sure. Okay, this is, yes, this one is 47. We were almost close to what? To the low. Almost close to the, yes, almost close to this level. I think it's the high of the previous day. Okay, we were almost, no, it's, yes, it's the high. We were almost close to this level here. But here we were still up. Oh, guys, this is amazing. This is just amazing. Okay, so this one had already gone towards this. It was almost close to this level. This one was way too far, but the correlations, they are doing the same thing on this day. They are doing the same thing on this day. Okay, so look again, this wasn't all. You see, this was just free delivery. This was free delivery. Okay, this was free delivery. We spoke about correlation countless times. I'm telling you again, if we didn't speak about this thing, please tell me in the comment section that I'm lying. If we did speak about this thing, please tell me that you've heard me talk about these things many times. Okay, because these are important things, and that's why on this video specifically I'm concentrating on the correlations. Okay, yes, of course the pattern was there here. Okay, and yes, of course you got a pattern here. Okay, but the most important thing was the correlations. Okay, let's look at what happened later. What happened later? They broke down below below the closing price of the previous day at the end of the session. Okay, let's see. They broke down here early. They broke down early, right? At the end of the session. But on US 30, they hadn't broken down. They hadn't broken down. End of the session, they hadn't broken down. End of the session, what they were doing? They were giving you a pattern. Yes, it's out of the session, but I'm trying to show you the correlations. I'm not saying, you should have got this one. No. This is, what kind of pattern is this one? This is more like a wedge. If you know patterns, this is more like a wedge. I always recommended people to go and read Richard W. Shabaka, okay? Technical analysis of stock market, and yes, that book, okay? I told you, go and read it countless times. If you don't get that one, you can get Edward and McGee, okay? That's another book, okay? So you see, they broke down here, they broke down on this ones. This one was the first to go up, but it was the last to go down. If you thought that like the move was over, look, they gave you a beautiful wedge with another evidence candle. With another evidence candle. You see. Oh, what if you doubted this? Guys, Nas had already given you a clue that these guys are breaking down. They are breaking down. They are breaking down. S&P had given you a clue. They are moving down. And I saw this, okay? I saw this. This one came late, and what? These ones have already broken down, and they are highly correlated on this day. They are giving the same moves. Easy, easy, easy. What happened? They broke down. They went another 200 pips. So on the way up, Dow wasn't easy. On the way up, Nas was easy. On the way down, Nas wasn't easy. On the way down, Dow was way too easy. Just when you thought it was over, again Dow went down easy, easy, easy. Even though this one went down, and this move was like, okay, maybe it was too late. You couldn't have trusted this. You didn't know, and that. Okay, but this one gave you another easy 200. So guys, Friday, I believe. Wow, guys, I can't okay. I just don't want to get overwhelmed about what happened on Friday. But Friday was just amazing, okay? Friday was just amazing, and I won't lie to you. Friday was amazing. So, guys, these things happen, and they are going to be there. It's just that they won't show up every day. Yes, the patterns show up every day. The most explosive trading strategy for indices does show up every day, because even on this one, if we were to, okay, they release trap volume. We spoke about this, okay? We spoke about this, okay? Whereby they release them as a stop hunt. I told you there are always three possibilities. It's either they're not going to release, it's either they're going to release as a stop hunt, or it's either they're going to trend. So we want to be safe. But even if you're trading the most explosive trading strategy for indices, if you didn't know anything about the part, the correlations, again, this was where they gave you a beautiful pattern. I think the problem is people are in a hurry. You are in a hurry to push the markets to give you a pattern. Just relax. You don't have to do anything, okay? Your job is not to force the market, okay? Because remember, if you're in a hurry to get an opportunity, the best you will do is to force the market to give you what it's not giving you, okay? That's the best you're gonna do. But you are there. Just be there. Just be there. It doesn't matter what time they give you the pattern and the easiest pattern, okay? Just be there. Don't always try to find the pattern. Hey, no. When the pattern is there, it's gonna show up, okay? The pattern is gonna show up so easily. The problem is when the elephant passes, you've already depleted your bullets and you are left with regrets, okay? That's the major problem. But when the pattern shows up, guys, it's gonna stand out. Just look at this. It's gonna stand out. Just be there in the moment. Don't try to force it. This is a W. No, don't do that. Don't force the pattern. When the pattern shows up, it's gonna be so easy for you to see. When the pattern presents itself, it's going to be so easy for you to see. It's going to stand out. If you stay long enough to wait for the pattern to show up, you're going to see it's going to be the easiest kind of thing. And I wish you can all grow into this state whereby you get to the level of patience, whereby you now know that it's not about you trying to move the market. You can't move the market, okay? oh, they're giving a pattern, they're going to break down, let me just, oh, and no, 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 they can close as a pin. Wait for the candle to close, okay? Because the moment you try forcing them, now you can't force something you have no control over, okay? It's unfortunately that's the nature of this profession. In other professions, you have control over the outcomes, but in this profession, you don't have any control over the outcomes. So your job is to actually wait for them to lead and follow their lead, okay? But I see people trying to force the market. Now you want the market to follow your lead. You're gonna lose, okay? You are not moving it. You don't even have enough capital to move the markets, okay? Okay, so if you can't move the markets, then just relax. Just relax. Okay, there are people who try to move the market. I remember, if you followed Bill Lipschutz, you realize that there was a time he was in a trade where he risked roughly $3 billion, and the trade was going against him on Friday. Okay, and he tried to actually move prices down. Okay, he tried to move prices down. I think at that time he sold the dollar, and the dollar started going up. It started going up, and what happened was that he went in like $500 million more. He sold more on Friday when there was less activity on the market. He put in $500 million to try to push the markets down. He tried to push the markets down with $500 million. You know what happened? The markets didn't even react to that $500 million that he put in. Okay, so he couldn't liquidate his position because there was less liquidity on the market. Okay, and he had to wait for Sunday, Monday opening, the Asian session. Okay, that's if you follow these guys, if you follow this trader. So you see, even with his $500 million trade that he tried to move the market, to push markets down with less activity, okay, he tried to move the market down so that he can reduce his loss, because he was at a heavy loss at that time. I think he was losing he was losing a lot at that time. Okay, he had a very big loss, so he tried to actually push the market down, but he failed. So guys, you don't move the market, you don't even have sufficient capital, so cease from trying to move before the market. Let the market give you. You see, even on these trades, we are following what has already been presented to us. Anyway, guys, this video is, I don't want it to get too long. 30 minutes is enough. Guys, I appreciate you. We'll talk about other things that transpired throughout the week, but I just wanted to remind you about the correlations, because we spoke about correlations most of the time, where one leads and one follows. So Friday, free. Okay, guys, I appreciate you.